into it. So today, right, we are going to be talking about entries. All right. So yesterday we spoke about directional bias, where we were adding and putting together what we've learned so far from market structure to liquidity to key level, then we put it together to give us a directional bias. So now, when you are addressing, whenever you are dealing with SLK as a strategy, structure, liquidity, and key level as a strategy, right? There are two things you need. You just need to know where your structure is, how you're going to, you just need your directional bias, and you need your entry. All right. Me personally, as little as it may sound, entries for me was a problem that lasted me for months. I understood bias, but entry lasted for months as a problem for me. As in, it took me months before I could understand what entries, like how I was going to handle entries. And when I finally understood, yeah, things became simpler for me, but then it made me feel dumb in a way because what do you mean it was this simple? And I couldn't just grab what it was. You feel me? So like whenever we're dealing with things like whenever I'm dealing with things like it always hurts me that I had to finally make a video. So now have to make a video for you guys. All right. So entry levels are not as difficult as you may think. All right. They are not as difficult as you may think, and it's not that much of a big problem. All right. All you just need to know is how it fits, how your directional bias, how your story fits in, right? How your story fits in for you to like get the exact zone you really want to buy or sell from. With that being said, let's get into it. All right. So for me, yeah, there are three things I like to look for. There are three things per se. All right. There are three things I like to look for, or you know, identify whenever I'm dealing with entries. All right. There are three things I like to look for. Number one, it kind of feels like I'm going to repeat it. So the three things. Number one, bias, liquidity, and structure. Now, when I say biases, am I buying or am I selling? This liquidity is where the liquidity is per se. Alright, where is the liquidity? Where is that place I'm not supposed to buy from? Right? And then structure. What structure is being presented to me? Alright, what structure is being presented to me? Just like I said before, there are three things I like to look out for, right? Directional bias, the structure, and liquidity. Right? The structure just shows me what the market is doing at that time, what is being presented to me. Am I seeing a QML? Am I seeing an RBS? Am I seeing an SBR? Am I seeing an engulfing candle? What am I seeing at that point in time? All right. So that's just basically what the structure is. Do not baffle yourself because like this is going to be simpler than you thought, and it's going to be dumber. And you find out that forex and trading is nothing but just English. It's just basically English. All right. So with that being said, let's address it. There are three major types of entries, right? There are three main zones. Three main zones I like to identify when I'm looking for my entries. Three main zones. All right. And a lot of people do the same thing, but like with different names. I don't know if that makes sense. All right. So the first one is an engulfing candle. A lot of people call this the order block. I call this the engulfing candle because like there are things I like to look out for before I start calling this an before the engulfing candle for me. I have manners in which I approach them. I did not approach them the way the other person would just approach what an order block is. All right. So there's the engulfing candle. There's the breaker block. The breaker block is literally your RBS SBR. It's almost the same thing. Alright, it's almost the same thing. RBS and SBR. It's just where to buy from whenever you are dealing with the RBS or the SBR. Alright, and then when you are dealing with the QML, the field QM, and also the head and shoulders type QML, whatever. We don't really know or care about how it looks like. All we just need is the left shoulder for entry. Alright, that is just basically what we need. So with that being said, let me explain. Alright, the first one which is the engulfing candle. Now, when we are dealing with the engulfing candle here, there's a way I like to approach it. The engulfing candle for me here, this is it. Let's just say you've actually gone through your bias and on the daily time frame, you've gone through your bias, you've done everything you're supposed to. Alright, you've done everything you're supposed to do. So the next thing you want to look out for, obviously, right, is where to take your entry from. Now, as normal, what you want to wait for is the engulfing candle. Like you want to wait for liquidity, right? But when you are dealing with the engulfing candle, 4 hour time frame, daily time frame, whatever time frame you're looking at it from, right? The engulfing candle, yeah, you have to wait for that same engulfing candle pattern to close. Like as liquidity. There is no such thing as going to the 1 hour or going to the time frame lower. No, you wait for that time frame to close. So if this was the engulfing candle was seen on on the daily time frame. All right. Then you have to wait for the daily to close. All right. You have to wait for this particular daily to close as the liquidity. That is why I said my approach towards it is not the same thing as the way it's not the same thing as that of the other block, because the other block any liquidity could fit in there. Alright, but when you're dealing with the engulfing candle on my end, I have to wait. So if this is the 4 hour time frame engulfing candle that was seen and fully formed, then I have to wait for this 4 hour candle to close as liquidity. Now, wherever it closes, that is where I'm going to take my entry. Do not forget, I mentioned this in the previous video. Alright, so wherever liquidity is, the next key level is where you want to take. Alright, so now on the higher time frame, this is what you're going to see, but on the lower time frame, whenever you're dealing with the engulfing candles, most of the time, this is what it looks like. Right, this is what it looks like. Then you have to wait. This particular 4 hour candle has to close, because that will be your that will be your liquidity, your inducement or anything. All right, so once it closes, you get to notice that on the lower time frame, it's probably going to be a V shape. So wherever it closes, that's where you're going to take it from. All right, so if you close it here, if the candle, let's just say the wick and everything, the wick, even if the wick closed by slightest at this level, something below here, I have no business in this level at this level again. I have no business up here, because this is how it looks like on the lower time frame, right? So I have no business above at this level again. Somewhere here, I have no business here, right? As long as it closes below, I have no business here. But if it closes somewhere here, then yes, I'll take my entry from here, right? If it closes here, if it closes somewhere here, then I know I'm going to take my entry around here. 9 out of 10 times, whenever it closes below this particular side of it, right? What you will see on the lower time frame is mostly something like this. Something like this. I'm not really the best drawer of killer. I think I've said that part in my previous videos. Alright, I'm not really the best. Give me a second. Alright, is most of the time going to look like this. Exactly. It's sometimes going to look like this. Alright, then then this would be the fair value gap on balance. But I don't read fair value gap, so I don't really regard it. But then yes, it's going to be here. This is how most of the time it's going to look like. All right, then you have to take your entry maybe at this level, something like this, right? And then you have to like cover up the week, and then boom, you aim for the high or the structure, what it is you are looking for. Okay, so whenever I'm dealing with key levels, whenever I'm dealing with engulfing candles, that is how it's going to look like for me. All right, so you have to wait. If it ends down here, then you take from down. If it ends above, where did it go? If it ends above, then yeah, you take your entry from above. The point here is you have to wait wherever this 4 hour candlestick, wherever if it's 4 hour time frame, it has to close up before you go to, like, it has to close up. Once it's finished, then you wait for this particular candlestick to close. This has to close. Right, this has to close. You cannot use an engulfing, you cannot use the liquidity from the 1 hour time frame. You have to wait for the 4 hour time frame to close. If it's the weekly, the same thing with the weekly. If it's the daily, same thing with the daily. You have to wait for the daily to close. Wherever it closes, that is where you take your entry. You take your entry from. Alright, so now to the next. That is basically what, and that's basically it's one of the solid confirmation entries I have there. Is it one of the solid entries I can actually deal with? Alright, whenever I'm addressing it, like I'm addressing the engulfing candle pattern, or I'm addressing the SLK pattern. Alright, so the next thing is the breaker block. This one is called the breaker block. Right? So the breaker block, right, is somehow like the RBS and SBR. It's actually the same thing if one wants to look at it. Right? It's basically waiting for where market broke, where price broke. Right? You wait for wherever liquidity ended. Right? Wait for where liquidity had ended. Now this place is where you can actually allow the 1 hour, the 30 minutes. So wherever liquidity is placed, then you take your the next key level after, the next A shape or V shape after. So this thing would also be reversed for the same thing for sales. Alright, let me see if I can invert the scale. Very good. So once price breaks, right? This is liquidity. This is liquidity for you. Then you want to allow price to tap, then reject. This is for my entry, right? If you want to take your aggressive entries and stuff like that, that is what you're looking for when you're doing the breaker block, right? So this SBR, the breaking S&R, this is called the breaker block. And the next place you can take your entry from, right? Let's return this back. Next place you are taking your entry from is the left shoulder on the QML. Right, the QML can be the head and shoulders, and can also be the field QML. Right, however way you're taking your entry from, the left shoulder is where you want to take your entry from, as long as you have your liquidity around that area. So if your liquidity is up here, do not get it twisted. If your liquidity is up here, you take your entry from the breaker block. If your liquidity is here, that it has gotten past the breaker block, right? Then you take your entry from what? The QML. People call this thing QMR. People even take their entry from here. It can be here, it can be here. So when I say A, B, and C, this is the A part, this is the B part, and the target is the C. All right. So here, people take their entry from here. Sometimes this could actually be up here, right? And people take their entry from here too. However, place your liquidity lies, take the next key level that follows. It is that simple. In a case where you don't have this QMR or this, then that's when you could obviously see things like what? The open close key level lying around. Then you take the open close key level. Right? That is basically what you're doing. So for me, whenever I trade, I look out for these three. Right? You don't see me trading other blocks. No. Instead, you see me trading engulfing candles. Right? You don't see me trading resistance break support. Instead, you see me trading what? Breaker blocks. Right? When you say the resistance breaking support, then anybody will just pick any zone they see. Right? But when you're dealing with it as breaker block, it makes you identify one particular zone, right? One zone you're looking for, one particular thing, which is what? Where where liquidity is. So if liquidity is here, I'm looking forward for market to come and sweep liquidity and tap into this breaker block. All right. So same thing applies for the QML, whether it be buyers you're looking for or whether it be entries. But since we're focusing on entries here, right? When you want to look for buyers, you can call this RBS, SBR, field QM, whatever. Right? But you can also call this other, it's your choice. But when you're dealing with entries specifically, right? This is a breaker block, this is a QMR, Quasimodo reversal. It's a point where we expect market to reverse from, right? And this is an engulfing candle. Right, that is how basically it is. That's basically it. So now let's go to chart example and explain this. Let's use the same GBP USD we had used a couple minutes ago. Alright, let's use the same GBP USD we had used. I'm so sorry I've not cleared my chart. That is my fault. That is my fault. Now see in this case, this pattern is an engulfing candle. This is an engulfing candle. Alright. Now an engulfing candle was completely formed. An engulfing candle was completely formed. This is an engulfing candle. An engulfing candle was completely formed. Do you see that we had to wait? Right? We had to wait for what? For candle to close. Sorry. Let me take this note. So we had to wait for candle to close. But price had already tapped that key level already. Alright? Price had already tapped. That is, even in the slightest, as long as that particular that side was already gotten to, then you have no business there. The next place we have to look forward was somewhere below. Or somewhere below. It can be here, it can also be like here, however place, but you look at it from the structural perspective, we can't find any other place to take entry. I personally I'll take my entry from here, but this was missed. Alright, so here. I don't know if that makes sense. I don't know if that makes sense. Now look at it from the daily time frame. I think we have the same drawing on the daily time frame. See what I'm referring to here. Yes, very, very, very good. Look at this. A lot of people like to address it as the other block. For me, this is an engulfing candle, just like I told you. All right. We have the engulfing candle that was fully formed at the same time broke a high. Now look at where this inducement had ended here, right? And still it still tapped it a little bit. So this is where let's look at this as our liquidity as our pullback. All right. So here, this is our liquidity. Where was the next place? However, even if it's here we took, or it's here we took, where was the next place? Price was nowhere near the top of this. So price came and it tapped this place. All right, I don't know if that makes sense to anybody, but then yes, this is exactly how it is done. All right, It is exactly how it is done. So we have the engulfing candle, we have the liquidity staring at us right there, and price him and that, and we get pushing. Right? This is in terms of buyers anyway. So when you are looking for entry, this is how it's meant to look like. That's what I'm trying to tell you. This is how it's meant to look like. All right. So now let's go over. Let's see in a situation where we have tap and reject from like where we have something from the SBR or RBS. Okay, so this is a very good example of SBR, RBS, and also it can also even be regarded as like the left shoulder pattern I'm talking about. All right, look at this. So we get to see that price have broken this high. All right, price broke this high. So the next thing we want to see is what? Liquidity. Liquidity was formed on probably any time frame you want to look at it from. All right, and price did what? Price tapped on the breaker block and moved. Price tapped on the breaker block, and also if you wanted to take your entry from the left shoulder, but you would have missed anyway. But yeah, this is the left shoulder right here. Alright, you see that price tapped what? Price swapped liquidity and tapped the breaker block and moved. It didn't really tap the left shoulder. For you to not get confused, left shoulder is always that little A shape or V shape that is beside where market broke. So if market broke this high, you see that there's a little A or V shape by the side. That is the left shoulder we're talking about. All right, that is the left shoulder we're talking about. Market did what? Price did what? Price broke this high, and this was the left shoulder. But in this case, this is where liquidity was. Liquidity was still at the breaker block level, right? And price tapped what? Price took the breaker block instead and left. It didn't really tap the left shoulder. Right? I think now we have the experience that we have the view of the left shoulder. Alright, let me see the situation where we have like QMR getting tapped. Okay, this is another very good example of the breaker block getting tapped anyway. Right, this is another very good example. And this is the QMR here looking at us. It's staring. Alright, looking at us very much staring. Price broke it. Alright, and this is our B looking at us right here. But price did what? Price took the breaker block instead and tapped on what? The breaker block, and then a little bit, you ranged a little bit, but yeah, price has been in buy streak. Right, so I'm trying to look for where I can find the QMR. QMR. Where things will be way more easier. This is another example of the breaker block that's happened here. So it's just like resistance break support, support break resistance. That's just basically what it is. Right. Okay. I think this is a very good example. This is a very good example. This is a very good example. By the way, this is the 4 hour time frame. So look at this. We have price doing what? Price coming to price broke this level. We have a left shoulder looking at us here, which is the QMR. Alright. And what did price do after? Look at it getting tapped. Although this will have taken you out. Anyway, that is where confirmations comes in. I'm going to address that in a little bit. Right. Price did what? Price tapped it here. There was a break. This high got broken. I think this high too got broken. Also, okay, it didn't really. Okay, yes. That's exactly what happened. All right, price broke this high right here and tapped towards this level. Although it's a missed one, right? It's a missed one. It's a missed one. It's a missed one. Slightly missed, right? But price did what? Price tapped it, and then we've been buying ever since. That's exactly what I'm talking about. Alright, that's exactly what I'm talking about. There is even the liquidity that has happened to us. This is the liquidity right here. Alright, this is the QMR at this level. Here's the QMR here, the V shape. I'm pretty sure it's going to look like on the daily. Let me see what it looks like on the daily. Do you see this? Do you see this? Okay, I think it's quite it's the same example that I even used. The same example. The same example. Alright, the same example. It's just on the 4 hours is a little bit closer, but you get the picture. You get the picture of what exactly I'm trying to draw. Alright, you get the picture exactly of what I'm trying to draw here. Alright, just know exactly where liquidity is. Alright, now when you place your entry, most of the time I identify 10 to 15 pips stop loss. 10, 15, 20 pips stop loss. 20 pips is my max whenever I'm dealing with it, because like when you know the right key level, right, it doesn't take it's sniper. It's usually a sniper. Right? If you missed it, that price was a little bit sinking a little, it means you missed the key level. miss the key level. And I usually aim, sometimes people aim for structure high, like the ERL exit and stuff like that, right? But my case, I aim for 3 RR strictly. It's a strictly 3 RR policy, right? As you can see, price tapped it and boom, right? Price tapped it and what? Boom, we've been buying ever since. Right? That's just how it is. Same thing goes for the left shoulder. Same pretty much go for the left shoulder and for the engulfing candle, for the sales, for the sales, right? Same thing goes for the sales. Same thing goes for the sales. Right? Same thing goes for the sales. I think the best thing for you to do, the best thing for you to do as a trader is to backtest. Right? You might get all this information, you might get all these things I'm trying to see here, you might see it, right? And you might not understand. But like when you keep watching and rewatching and rewatching, and you go back and you take your time to actually backtest these things I'm saying, then yes, things will be way more easier for you. This will be more easier for you. So do not forget what I said about market structure. Do not forget what I said about liquidity. Do not forget what I said about key level. Don't forget what I said about directional bias. Now entries, I said they are divided into three, right? Structure, directional bias, and what liquidity. So when you have that in mind, so you structure, is it, let me use it this way, is it a breaker block, is it an engulfing candle, is it a field QM? Directional bias, am I buying or am I selling? Liquidity, where is liquidity? Alright, when you have this in mind, then you know that the next key level you are supposed to take after liquidity shows itself is what is what you enter with. Alright, so am I seeing a breaker block? Am I seeing an engulfing candle? Am I seeing yeah, a QML? That's exactly what I'm talking about. So when you do that, things become clear for you. So that's about it. That's about today's class. That's about today's class, and that's about everything I have for you on structural liquidity and key level.